Good question. Why do banks fail? Well, it's a very complicated but not complicated answer. I know that sounds crazy, but I'm going to go over 5 reasons why banks fail and have a few ways you can protect yourself to keep this from destroying you financially. But before we get into all of that,
Allow me to reintroduce
my
myself.
name is Devon Puddingwork Burke, the Wealth Builder himself. And if you love content like this and talking about making more money, saving more money, building a better you and business, then go ahead and subscribe to this channel and like this video. Alright, so like I said, I'm getting to the top 5 reasons why banks fail, but definitely stick around to the end of this video because I'm going to explain to you how you can protect yourself from any bank failures as much as possible and a way you can learn business credit for free. All right, so let's get to it. All right, number one, bad loans. Loans comprise a large part of the traditional banking business, along with holding depositor money. Before the latter part of the 20th century, banks primarily made loans to individuals to buy homes and to businesses to enable them to grow. Credit analysis skills are critical to this line of business. Okay, in this regard, most large banks have huge training programs dedicated to the development of new lending officers who are taught how to assess the risks of borrowers and protect the bank's assets and profitability. When credit standards are lowered to attract more lucrative business, loan losses inevitably increase and create financial problems. In the past, risky loans to foreign countries, real estate investment trusts, and mortgage companies have created severe problems for banks and ultimately caused some to fail. Okay, so bad loans can definitely destroy a bank. All right, now let's move on to number two, funding issues. Okay, banks have balance sheets that carry huge amounts of assets. These assets are generally financed with a combination of short-term credit, bonds, and equity. When a bank has problems refinancing its debt or repaying it, the bank may fail. Funding problems are sometimes related to general market conditions, but more often occur because investors lose faith in the bank for some reason. Okay, it could be a lot of different reasons why they lose faith in the bank. Like we said, different investments, different maybe a takeover from another bank, a CEO change, things of that nature. It's a lot of different reasons why investors lose faith in the bank, and it can go belly up. Number three, asset slash liability mismatch. Okay, so what is that, right? Well, when a bank's assets are unmatched to the liabilities supporting them, severe problems can arise. The simplest example is a floating rate liability financing a fixed rate loan. If interest rates rise, the bank pays greater and greater interest on its liability, while the fixed rate loan pays the same rate. That doesn't make sense, right? This mismatch can result in a huge loss. When a large portion of a bank's portfolio is mismatched, the result can be devastating. Okay, and we are seeing that around the globe, around America, around the United States with different banks, right? So you gotta definitely watch that. Number four, risk management decisions. All large banks have extensive risk management groups that constantly quantify the absolute level of risk in the bank's portfolios. They measure risk from every conceivable perspective, including interest rate risk, foreign debt risk, investment risk, and much more. When miscalculations occur in conjunction with a significant market movement, huge losses are on the rise, okay? They're not only possible, but they're gonna happen because all those different factors will definitely cause a bank to go belly up. All right, number 5, non-bank activities. You know what I'm saying? A bank need to stay in its lane sometimes. You know what I'm saying? Over the years, banks have dabbled in non-traditional business looking to improve profitability. Okay, everybody wants to improve their profitability. Everybody wants to make more money, right? And banks are no different. They want to make money. But the problem is they experimented with like real estate, investment trusts, leasing companies, consumer finance companies, and non-bank foreign subsidiaries were mostly unsuccessful and resulted in huge losses within the last 2 decades. Okay, so that's why there's been so much, changes and rules and guidelines for banks and things of that nature because of these crazy antics that these banks have been doing and investing in things that didn't really help. They just put their business at risk for failure. So all in all, there are a bunch more reasons why banks fail, but you can check that out at the link in the description below and read the full article on why banks fail. So now the next question is, how can you protect yourself from a bank failure, right? Like how can that be possible? Well, first thing is to never put more than $250,000 in a single bank, especially if it's your personal money, because anything above $250,000 is not FDIC insured. Okay, let me say that again.
Anything above $250,000 that's in a bank is not FDIC insured.
Okay. Second thing is to make sure to have cash in a safe. If you can have at least $10,000 saved in your safe, okay, that will be the best bet. Okay, I know it might take you a while to get there, but the way these banks are crashing nowadays, having some liquid paper cash and a safe at home is worth the trouble. Okay, let's move on to the third thing. The third thing is to invest your money and don't just hold it in a bank. Okay, because as you can see, you never know when things might change. Okay, so you can invest in, you can hold your money in real estate, you can hold your money in stocks, you can invest in other businesses, you can invest in cars and have them, making money on their own. It's a lot of different things you can invest in where your money can be at, and if things hit the fan, you can sell and get your money out, right? And if you want to learn how to build business credit and take your business to a new level, go check out my free 5-part video series. All you got to do is put your email in and it will be sent directly to your inbox. The first link in the description, okay? Just click that link and put your information in, all right? And you will get the free video series on how to build business credit just using your EIN number. Okay, so thanks for watching. It's the man, it's the myth, the wealth with himself, Devon, put in work, Burke, signing off for Why Do Banks Fail and How Can You Protect Yourself? Do remember, wealth builders, make more, save more, build more. Peace.